Hi everyone, welcome to FinTech Academy. This is Hirsch. Today I will go over the Canadian payroll and the topic is additional employer costs to base wages of payroll. Alright, let's explore and understand this particular topic. Additional employer costs. Payroll costs are often a significant, if not the single largest operating cost of many organizations. And that is true that, the payroll cost, it can definitely be the top three costs in any organization. In addition to base wages, employers need to recognize an additional minimum costs of employment of about 20%, and the additional cost could be apart from the base wages which are being given to an employee, there could be minimum and additional 20%. Now that also depends on a few factors like the geographical location as well as the industry that the business is under. Let's have a look at what could be the additional costs. The first is employer CPP contribution. An employer must withhold CPP premiums from employee checks and match these payments. Premiums change annually, and as of 2021, the rate is 5.45%. The next after that is employer EI contributions, which is employment insurance. The second withholding from payment to employee is the EI premiums as administered by Service Canada. The rate for contributing EI is 1.58%, and the employer must match the employee contribution, usually with a factor of 1.4 times. The one after that is workers' compensation premium. Each province and territory administers an insurance plan to provide benefits for workers injured in the workplace. The name of plan and administrative procedures vary across jurisdictions. The industry rates vary significantly based on historical rate of injury claims from the industry. So workers' compensation premium is also an additional cost to the employer, and that varies by jurisdiction, i.e. by the province. Like for example, in Ontario, it is called Workplace Safety Insurance Board, WSIB. Of course, we go more in details about that and each of these when we study about the Canadian Payroll Administrator course at FinTech Academy. All right, the next cost is employer health tax, or at times it is also called EHT. Provinces and territories fund health care through general tax revenues and transfer payments from the federal government. Some provinces also collect premiums or employer payroll taxes to partially fund health services. Minimum holiday pay. After an employee has been with you for 30 days, they are entitled to general holiday off with pay. If they work these days, they must receive time and a half plus holiday pay. If you have a part-time employee, they are eligible for paid holidays proportional to how many hours they work. The next one is minimum vacation pay. In most cases, you have to provide employees with 2 weeks of paid vacation per year. Based on provincial taxes, this number increases as employees stay with the company. So these are the additional employer costs for an employer when they hire an employee apart from their base wages. So let's have a look at an example over here. This is a sample minimum employer costs of payroll. To illustrate, consider an Ontario situation where the following costs may be incurred. Sample minimum employer cost of payroll per $100 of wages. So every $100 of wages, this is the cost which a sample or an example has been illustrated here. First of all, employer contribution to CPP, which is 5.45% or $5.45 per $100. Next is employee EI premium. Now remember, 1.58 is the factor for employee. The employer has to contribute generally by 1.4 times, so that cost will be $2.21. The next is workers' compensation premium average. Now this is just an average $1.37 depending on your industry. the rates vary. So if someone wants to learn more about that, they can go to the if you're in Ontario, you can go to the WSIB Ontario website, and you will see the rates can, depending on your industry, it can significantly change. So we're just going to take an average $1.37. Ontario health tax, or the employer health tax in Ontario, $1.95. Now of course there's an exemption in there. If your payroll is below that, then you don't have to pay anything. If you go past that amount only, then you have to pay the employer health tax. So there are rules for each of these, of course. In this tutorial, I'm just gonna consider, let's say this employer does have to pay a health tax, so $1.95, because it is 1.95%. Next is holiday pay, the minimum one, which is 9 days. The cost of that is $3.60 per $100. And the last one is, we know vacation pay in Ontario is 4% or 2 weeks, so $4 per $100. So the total cost comes to $18.58 per $100 when an employer pays to employee. So that's an additional amount they need to ready. Now this is, as I mentioned, the workers' comp is an average. If your industry is at a higher amount, then this, of course, this 1858 will go up. But this is just a rough idea that, you know, how much it could be a cost for an employer when $100 of wages is paid. Alright guys, so if you found this video helpful, please like our video and subscribe to our channel for more videos. Also let me know in comments what would you like to see in future videos, i.e. Harsh, I want to see this video, Harsh, can you make a video on this topic for accounting and bookkeeping, QuickBooks Desktop, QuickBooks Online, Microsoft Excel, Canadian Income Tax T1, Canadian Income Tax T2, or Canadian Payroll. Alternatively, you can visit us at fintechsolutions.ca for our courses. Thanks for watching.